Isn't insurance a terrible investment? This is probably the most common objection I hear. Insurance is a terrible investment. And honestly, that's a fair statement. Have you ever been told that insurance has low returns and should never be used for investing? The problem is, it's the wrong comparison. Insurance is not designed to be an investment. It's designed to be like infrastructure, like roads, power grids, plumbing. Infrastructure isn't exciting, but nothing works without it. What happens if you judge infrastructure by the same rules as speculation? People compare insurance to stocks, real estate, private deals, but those are deployments of capital. Insurance is where capital lives between deployments. Should the place where money lives be judged the same way as where it's deployed? Most people obsess over rate of return, but rate of return ignores liquidity, timing, volatility, and forced decisions. What good is a high return if you can't access the money when you need it? Control determines when you act, when you wait, and when you take advantage of opportunities. Markets drop, people panic, money gets pulled out at the wrong time, compounding gets interrupted. How many great investments fail because people lose control at the wrong moment? Yield is how much something earns. Velocity is how many times that same dollar works. Most people only think about yield. Banks obsess over velocity. Why do you think banks are comfortable earning modest returns on capital? Because the same dollar is used again and again. Insurance allows stable growth, liquidity, and reuse of capital. That combination increases velocity, even if the raw return looks boring. What if boring returns with high control outperform exciting returns with constant interruption? The real question isn't, is insurance a good investment? It's, what role does it play in a complete strategy? What would change if you stopped judging tools by the wrong job description? Banks don't use insurance for yield. They use it for stability, liquidity, and balance sheet strength. Individuals can use that same logic. What happens when you start thinking like an institution instead of a consumer? Once you understand the role insurance actually plays, the next question becomes, how does borrowing against it really work? And that's what I'll explain next.